Shout out to Discourse. It's your boy Debtfreedeem, and I'm here with
Jamie. No nickname.
That's it.
That's it. That's all you
See
got.
how it sounds weird when you do that?
I know.
Anyway, we're gonna talk about insurance.
Yes.
And we got a fiery debate. What insurance is better and what insurance works for you? So, Jamie, I'm not a financial advisor.
Mm-hmm.
I don't sell any products. Hopefully down the road I do. But I'm a term guy.
Cool.
Dave Ramsey has preached term insurance to me. I understand it. It's very simple. But we often have an argument all the time about a certain type of insurance.
Mm-hmm.
You want to break that down?
IUL. Index Universal
Sounds like a scam already.
No, because it's okay.
Sounds like IUD.
No, no. Index Universal Life. So it's a whole life policy.
Yeah, so we have term insurance versus a whole conversation, but you're talking about a different product within
the whole.
Got you.
So I did a brief stint in a insurance job.
Mm-hmm.
Yeah, brief, like a year. So got my knowledge up. Actually got certified to sell life insurance. And yeah, I like index whole life. That's my wave.
You don't have it yet, right?
I don't have it yet.
Thank God.
I know.
Okay. So the reason why I'm saying that is because I feel like there's predatory insurances that people would get into.
Yeah.
And that's why I want to have this discussion.
Yeah.
I think we, a few months ago, I think in the summer, we had a good conversation over the phone about moving forward in insurance.
Yeah.
You brought up some great points. And then I brought up some points where I was like, this is just not a product that I feel for our community is the best thing.
It's pros and cons. I can't say for our community because depending on your situation.
Yeah.
Depending on who you are, how healthy you are, your age, things change.
And all things that are bad in the black community.
Yeah.
We talk about health.
This is true.
We talk about wealth.
Yes.
I think we overcomplicate
On
things.
an average, I will give you this. On average of a black person, I'm 32. Good health.
Yep.
Term is probably the way to go
For you.
for a 32-year-old healthy black person. Man,
I agree.
but IULs are beneficial in other ways, like for your children, for people that don't really have any health issues.
Got you.
So in IUL whole life, it's more of a savings vehicle. It's life insurance
Got you.
with savings. So
All right.
it's twofold.
So here's where I kind of start disagreeing with products in the financial industry that like mix things up.
Good old Dave.
You can say what you want to say. Papa Dave taught me right? But I don't like things to mix. So when I think about life insurance,
Yeah.
I think about insurance. It's supposed to protect you, right? Protection. That's what we need it for.
Yeah.
Now, when you start mixing in return on savings and investing in that, you kind of lose out how to calculate, am I really getting a good return on this product? Follow me. So with term, I know if I get a policy that's $35 a month, right?
Mm-hmm.
I'm paying what? Maybe $360, $400 a year for that.
Mm-hmm.
If I die, I could get 10 times my yearly income, whatever that's going to be. That's what the recommendation is, and get 30 years. Now, why am I doing that? I want to protect myself and my family if I die.
In your earning years.
Correct. So if I die, right, my family has my income,
Yes.
right, to carry on for a certain amount of time. So, if I'm making $50,000 a year, I would want $500,000 of life insurance. So that if I die, my family could potentially live as if I was there for 10 years.
Correct.
Hopefully that they would make some moves, do some things that could like free things up so that me not being there is not a burden. Now the savings thing, that's where we get a little bit weird with it.
So rum is good.
Rum is good.
Coke is good.
Coke is good.
Rum and Coke together is also good.
Is a hangover.
No, not necessarily.
Go ahead.
What I'm saying, you get my point.
Things put together could work.
It's nice and clean.
Yeah.
Term is nice and clean.
Lemon and lime.
Nice. It works.
Yes.
So I'm saying if done properly, Properly is my key word, because a lot of times. So, back to your first point. Insurance companies, they are predators.
Mhm.
Like, the job is based on
It's a gamble to them.
selling you something
Yep.
that you are not going to benefit from, but they will. So they're trying to get you the most that they can. I mean, I've been in it. I've seen it. Like, the meetings we had, it's like a party. Like, these dudes are just out here trying. It's like a
scam.
weird scam. It's
They
just
scam.
it's crazy.
They scam.
Um,
And look, they push the let's keep it a buck. The term insurance is the least profitable product they can push.
They don't want you to buy.
They
it.
don't want
They
you
don't
to
buy
so
it.
listen, the
That's
people
why you
that
like
push
it.
term, they don't want you to buy it. They want you to buy the fancy stuff.
Yeah.
The Bentley, the Ferrari of insurance, and then hopefully capitalize on you paying and they get money in their pocket.
Yeah.
Right?
So I will say this, and we talked about it. Term, if you just want life insurance for the time that you are working, you want to get paid out in case of an accident, term is the best way to go.
Okay.
People, best way to go, regardless age, health. Term is the best way to go
If you want to get paid out for dying.
for dying.
Gotcha.
Like in your earning years,
Got it.
because a lot of term never gets paid out because people live past their term.
Got it.
Makes sense, because after their term, they don't need that. They don't,
Yep.
they're retired. They don't need that life insurance anymore.
Understood.
If you want life insurance to get paid out when you die, regardless, whenever you die, you want whole life insurance. If you want to
Repeat that again, because I want to make sure they understand. If
True.
you want to get paid out regardless of what?
regardless of when you die,
Yeah.
because term is a term. It's 15, 30, 20.
Yeah, it term meaning after this agreed time,
Yeah.
15, 20, 30,
Yeah.
it's done. There's no possibility. You don't have to pay anymore,
Yeah.
and we don't have to pay you if something happens.
Correct.
So now go through with your point. Now,
Whole
the
life.
other one.
Whole life is if you want something when you pass away, regardless, 60, 70, 90. You want your family to get money. You want whole life.
Okay.
And whole life, and tied to whole life, there are a lot of saving, let's say, potential saving assets into whole life that you can put money in, take money out, borrow against. So IUL, I'll speak specifically on IULs. I like IULs, especially for our children, because as a child, normally children are healthy, they're young. It's going to be cheaper. The cons to IUL is the premium. It's definitely going to be higher than term.
I'm glad you said that.
Definitely higher than term. I'm not going to disagree with you.
Okay.
But for children, especially like under the age of 5, healthy, no serious medical conditions, the premium is going to be a lot less
And you are talking about a policy for the kid,
for the kid.
which
Now-
I completely disagree with.
So and the thing is, this is because it's not used as traditionally a life insurance. We're not expecting the kids to die.
Exactly.
We are using it as a savings vehicle.
All right. So one thing I want to tell you,
Mhm.
if you were to take out a life insurance for a kid who's 5 years old,
Yeah.
the price of that term insurance would be so astronomically low.
Yeah.
It would be ridiculous not to get the insurance. If I
We're
told
not talking about, we don't want it.
yeah, but you're getting life insurance anyway for the kid,
True.
but then you're trying to do an investment.
True.
So here's where me and you disagree. The term insurance that I could get for my child could be, let's say, $20 a month.
Mhm.
That is what we're saying, $240 a year. Now, I could say, hey, I want a policy of $500,000. The next thing I could do with the same money that I would put into a premium for the same kid.
Yeah.
Let's say the premium for the UIL would be $300. And I
Okay.
want you to,
Oh, okay.
because you were in the
All right.
industry, so I want you to tell me what the premiums averages you saw. But I could take $60. I could put it in, and remember it's a month. So I could take $60 a month,
Mhm.
and I could put it into a mutual fund.
Yeah.
I could put it into the S&P 500, which I want to clarify, you have to buy a whole piece of the index. So
Mhm.
you have to wait a couple months and then buy into that, right?
Mhm.
But you could buy mutual funds for $60 and you will see an astronomical return for the same term. So let's say I got my kid, I don't know, I think he's going to be a reckless kid. He was a crazy baby jumping off the the top rope of the crib, drinking expired milk all the time,
Wow.
just wilding.
Wow.
This kid's a hothead when he came
Whose
out.
fault is this?
Sometimes the soul is just the soul. Pops out the womb, wilding. I'm like, you know what? You need life insurance. You a wild baby. Put 20 years on him. Because, 2 years of college, you don't know what this firecracker's going to be like.
Nobody's going to do this.
You buying insurance for the baby.
But I'm buying.
I'm telling you how to do it right.
I'm not buying term.
But then I'm going to put $60 into a mutual fund every month for this kid up until he's 20.
Okay.
I'm going to ask you, do you think the return is higher on that $60 a month insurance and the mutual fund investment that I'm making, or the UIL, the IUD?
I think it's, be honest with you, it's slightly higher. I think on the IUL, slightly higher than the S&P 500 if you were to do that. Mm-hmm. And the fact that the tax benefits are pretty much the same. That you can get it tax free, you put it in tax free. It's you can touch it whenever you want to touch it.
You can't touch it whenever you want to touch it. So you remember the vested part.
You got to get vested.
Thank you.
I'm sorry.
So
let's
clear that.
See, let's not lie. I'm lying to the. All right. I don't want to lie to
keep
people.
It a buck.
You
keep it a buck.
You got it.
Well, a salesman will come to you and say,
"You can touch it whenever."
He'll come to you. Yeah, man, you can take out a loan for $19 million by the time.
No. You got to be vested.
Go ahead.
But so also
talk about the vested part though.
You got to be. You got to put a certain amount in to be able to even. It's a certain amount of
10 years.
Certain amount of years. Yeah.
10 years.
So I mean,
so this is what I'm trying to say. To even access your money,
true,
you have to wait 10 years into the UIL to really take out a loan. Remember, it's a loan against your policy.
True.
That you don't have to pay back.
Now you say it in air quotes, but you do have to pay it back. But generally, you don't have to pay it back in your lifetime because
you're just gonna die.
That's
what I'm saying. Is crazy.
Your life insurance policy is going to pay that off. So let's say, for example, you have $100,000 life insurance on this 5-year-old. You borrow whatever. Let's say you've been putting, as an adult, I've been putting money into this until he was 18. He has enough. He has like $30,000 he can pull out, buy a car, buys the car. So now it's $30,000 you borrowed from your life insurance. When you die, the $30,000 is a wash. It's just the wash is just gone.
You don't have to pay it back.
No, because your life insurance is going to pay it back.
All right. Now
you're paying it back when you die.
First of all, crazy thing I just thought about. Imagine a kid, you got $100,000 on this kid. Mm-hmm. He pisses you off. You're like, yo, what? Take this kid out.
You gonna take?
Well, we not taking. I'm just saying. You know how we are as parents, man.
But like, yo, you talk about, yo, that's a lot of money just sitting there. Wow.
I'm sure. You don't think our wives is plotting on us when we have insurance?
Nah.
Sometimes
I don't do nothing. Nah, I don't do nothing that crazy
when I'm sleeping. I'm like, what's going on?
Sometimes, yeah. Sometimes.
But going back. So, okay, I hear you with the car thing, and but that's why I said when I went back. If you're here's the thing that I know about human nature. Things are gonna go wrong.
True.
It's gonna rain.
Yeah.
When you put in the 240 on the every year, remember, I'm not saying it's a month.
No.
Term insurance is $240 for the year, and I'm doing $60 a month on top of that to put into.
Yeah.
So
what happens if you miss a payment?
You lose.
You lose your term.
Yes. What happens when you miss a payment on UIL? You lose your
you lose it.
All right. So I'm glad you brought that up. Yeah. But what per month cost is higher?
It's definitely going to be IUL. But so,
and then what can I skip?
What can you skip?
I can skip my mutual fund payment.
You can.
You're not. That's what I'm saying.
That's nothing definite.
What's so crazy is like they're not telling you these other products that could work and help you. So it's not like I'm putting in $300 a month. The UIL or the whole life insurance policies, their premiums are so high sometimes. So it's like you have another car payment.
Yeah.
Whether it's $200 a month to $50 a month, that's usually the range. $200 to $300.
Yeah.
The part that I'm having a struggle with is if you miss that payment, they can cancel your policy. All right. So, and now this is the savings that you have, and this is the predatory part. You've been paying for 6 years. You're almost vested.
Yep.
Company calls you, COVID, job gone. Now you got to sell your booty on OnlyFans to get your life insurance paid.
Jesus.
What, you didn't like that?
That was tough.
They selling booty on OnlyFans, Jamie. Feet pics. You gotta do feet pics to keep your life insurance.
Not opposed to
That's
that.
not fair.
That's nice.
So now on the flip side, the term came. Okay, I was paying. Remember, I told you I was paying $20 a month for the kid. $20 is tremendously different than the $300 a month or the $200. Let's go $200.
True.
On top of that, if hardship happens, I can ask somebody for $20. Another thing too, I could stop my mutual fund contribution anytime. I don't get penalized. I don't lose my mutual fund because I'm buying shares. The whole time I own the shares. So by the time the kid is 16 and I had hardships within those 16 years.
So you're saying a combination of term
of those two,
yes, is better than IUL
can never be. Can never be because of the fact that the insurance company can shut me down if I get into a hardship. And I told you about that. I told you that's the thing that in our community.
Isn't that a risk isn't that just a risk you would have to take in that situation?
No. When there's other routes?
I'm saying, what if the IUL pays more? I'm taking more of a risk.
You said the IUL pays more, which is not true. I bought a $500,000 policy for my kid. I'm gonna potentially whack my kid for $500,000. You could whack your kid for $100.
What do you mean? I'm not doing that.
We're not saying. I'm just saying potentially.
All right, what are you talking about?
All right, potentially somebody get hit by a bus and then $500,000 here, $100,000 there. You know the payouts for the UILs are significantly cheaper. You're paying more in premiums for a cheaper policy, $100,000, $200,000. Yes. While I'm paying less monthly.
No, I'm saying
for
it's
more death dollar.
No, I'm not talking about the death dollar because we really don't care about the death dollar. So that's what I'm saying. IUL, we're not caring about if you die.
What is happening here?
We're caring about your savings component to it.
Yep.
So I'm saying S&P 500.
Savings. Go ahead. Because come on, man.
IUL. I put the same amount of money into both products. I think I'm going to get more money in this IUL. And the S&P 500 is not protected like the IUL is.
What are you talking about?
It's protected by the index. Like, I mean, all right, granted, the S&P...
Say it again. Because they're both investing in the market. They should be.
I know, but the market can crash.
You're right.
But the index, that's what it's index, because there's another whole life, like, I forget the name of that one, but it's index, meaning it's protected by a certain cap that it can't go below. So if the market crashes, that's not going to go down.
Okay. We do know the market always comes back. We do know that.
It does.
Okay?
Mm-hmm.
Once again, what I'm saying is that, unfortunately, our community is not well stable. So you have to go with the person you're advertising this product to.
That's why you get me. Because I'm arguing. I'm arguing to the fact is, like, you say our community. And I think everybody needs to be a,
millionaire.
No. They don't need to be a millionaire. I'm saying everybody needs to be informed and make the best decision for them. But in our community, I think just to cut out all the drama, term is a good product.
Yes. So, okay. So I'm glad you said that. At the end of the day, I think majority of people should have term insurance. Should be a guarantee. On top of that, if you can afford it, I think you need disability insurance as well.
Yeah.
So like if something happens where you cannot work, that's another way to cover yourself. Yeah. You have to have all these things into play to just walk through life a little bit not cautiously, but you can live without worrying. Now the next thing is your investment strategy. You shouldn't even have money to put into some type of savings product like a UIL. You know why?
Why?
Because you put in 15% into your retirement, your 401k.
Your what if they already did that?
I doubt that our community.
Come on,
who are we talking to right now?
You a hater.
Who are we talking to right now?
What if they do that already?
I want to tell them to comment if they do that, and I guarantee you, hot take.
If they do that,
no one that follows me on my page contributes 15% into their retirement. Wow. And if you do, please comment that you do. But I doubt that happens. You know why?
Why?
Because I can't pay my bills, can't pay my telephone bill, can't pay my insurance bill. Nigga need to chill. Stop door dashing you. Food's making you a fool. I told you I got bars, guys.
That's crazy.
I told you, fam.
That's crazy.
That whole song was a cappella.
That's
beat,
wild.
no beat.
That's wild. No, sir. No. No, sir.
Come on.
No, I mean, I don't. Most people
Killing
are.
them. Killing them.
Most people are not contributing 15% to their savings. I give you that.
So let's do those things first. That's all I'm saying. Let's get a cheap insurance that's not going to stress us out every day. Yo, that's another thing. Insurance is costing less than an OnlyFans subscription.
Oh my
Get
God.
your insurance, fam. If you have an OnlyFans subscription and you don't got insurance, you're crazy.
I mean, yeah, we started off the
Why?
conversation with talk about insurance when a lot of people don't have insurance that should have insurance.
But everybody needs to protect themselves. So I think insurance is the way to do it. Protect your future by investing.
Once you have a
heavily into
child, you should have
retirement.
insurance.
If you have a job, you should have insurance.
Once you have a child, you should have
Guaranteed.
insurance.
Guaranteed. Like, even from my experience, as soon as Alexandria was born, insurance policies were actually before that.
When she
Before
was
that.
pregnant.
Pregnant.
Yeah.
We got the insurance policies.
Yeah.
It's mad easy. They come in, take your blood pressure, whatever,
Yeah.
and then you're done. When that bill comes, bro, it don't feel like nothing. And I don't have it on monthly. It's just paid.
You pay
yearly.
yearly? Oh, yeah.
You know what I'm saying? It's like it's like Amazon. It's annoying, but it's not that much money.
Yo, the yearly joints, when the joints hit, you be like,
Oh,
what the
I'm
fuck?
thinking my current prime. Every time the prime come out, I be like,
What the fuck is
this
I was like, oh.
99?
I was like, oh, yeah, I
How
did.
much are they hitting you for now? 99, right? Or 109?
You told Amazon?
Yeah.
Yeah.
They wild, bro. I'm about to cut that off. Like, what do we do on Amazon?
We don't see, like, the monthly joints we chill with. Like, it could be like $20
I'm
a
not
month.
chill with anything like that.
I don't know. Maybe I'm chill with stuff that's monthly. When I see the yearly ones, they're just be hefty. Like
It's the same breakdown.
Microsoft,
You know that?
Microsoft is like
Microsoft is. I'm not paying for that. There's certain things. If you have a subscription, I'm not paying. I'm not paying for Microsoft. I'm not paying for. I feel like if Amazon was monthly, I wouldn't pay for that either.
No,
But because it's out of my way,
it's not. Yeah.
Amex annual fund.
Oh,
Annual
yeah,
fee.
yeah. They would definitely not get paid monthly.
Bro.
they would.
That just hit. Oh,
Jesus.
$690. What?
What?
You don't hit me in my mouth like that?
Yeah, it should be wild. I feel like.
But the thing I like with, and this we could have a whole kind of conversation about this, but at least with Amex, you get something back, which is like you get lounge and all that stuff.
You gotta
so
use it though.
you got to use
Most products out here, I'm telling you, people they make their money on you not using it.
I'm glad you said that. That's why UIL is not for everyone, right?
I never said it was. I never said it was, but I do say.
But hold on, let me finish. Because I want to advertise what UIL could be used for.
Okay.
Right?
You think it could be used for something? You like it for certain? Okay, go ahead.
So now when people talk about this, because I did research to find out, like I understand when people bring up a point, and I think it was like Waka Flocka talked about it a little bit, but he did like the fast, quick podcasting, right? And I think what people are doing is you can create a structure where you just pay for access to money when I need it. So if I'm paying $400 a month, but I'm making, $1 million a year, that doesn't mean anything to you.
Yeah.
But then I have access to $100,000 that's kind of tax free.
Yeah, the tax benefit.
That makes sense to that person.
Yeah.
Because I'm going to spend $100,000 40 times.
Yeah. But if you lower that scale, it still would make sense, no?
That's what I'm saying. The $400 stays the $400. So as you go down to the regular community pay scale, that's what I don't agree with it. So the millionaire, be stupid, and he could be stupid with $400 a month, $300 a month, $200 a month.
Yeah.
Because he's going to try to flip that and do real estate. He's going to try to, he just want he or she wants $100,000 to grab, put it into the community. And like you said, I don't got to pay it back on a structured time. But that person is trying to make that $100,000, $150,000, $175,000.
Yeah.
Bring the money, clean that up. Now, if I have another idea, I take it out again.
Yeah.
That's where it makes sense. Now, little TK, sit yourself down talking about, I'm about to like make a Twitch stream, do an NBA 2K, and I need $100,000 to make my equipment. Fam, relax. It's not gonna work out for you.
In that situation, I would agree.
what I want people to do is insurance protects yourself. If you really want to start saving, understand index funds, understand mutual funds. And what I like is build up a discipline where you're in control of your investments and you're putting the savings to the side. You're seeing it grow. You know what I'm saying? You're understanding how your money should be moving. Now, when you get to in 10 years, you should be $60 is $600, right? So that's $6,000.
Yeah.
You should have a plan for what that $6,000 is going to do. It's not a lot of money,
But you still.
but maybe as your life goes on, $60 a month turns into 80, turns into 100. It's the discipline of putting that money into something. But I don't think the proper way to think about this is like get UIL, pay a high premium that they gonna take away because we know what happens. Majority of people in our community just don't have the job to sustain that. Or their expenses hurt them because the luxury condo got to get paid. The luxury apartment that they got to get paid. The CLK Mercedes payments got to get paid. You know what I'm talking about, bro.
I do. I understand. I mean, to end the discussion, I agree with you on multiple points, and I don't think you've agreed with me on my points, but
Not at all.
IUL is a good product to me if used when you're younger and you are capable of making that payment, 100% capable of making that payment for the rest of that person's life. Other than that, term, you need life insurance. You need life insurance.
Guaranteed, yeah.
Guaranteed. You need to start saving. Guaranteed. Me, like I would not buy an IUL for myself. That's what I want to get across. I would not buy it for myself. It's not for me. It's not beneficial for me. It's not, but I would buy it for my child because he's not.
I swear to God.
Yeah. He's your godchild, so you're gonna have to fight with that because I'm gonna buy it.
Don't worry, man. I'll save you.
But
don't do it.
No, I'm going to do it. But just be informed. Like these insurance companies, they are going on the knowledge that you are not well informed, and they're gonna sell you on the best product for them. Money, it's for them. It's not for you. So be informed and make the best decision for you. If you got that coin, you can get IUL. Be pretty successful.
Coin, or if you have a plan to do something with the money, it's going to be a good return. Get that. I'm all for that.
But if you a normal, average person, term is probably your best.
Stay in your lane.
Yeah, that's big.
Stay in your lane.
We talk about that in relationships. Stay in your lane.
Sometimes you got to eat TGI Fridays and Applebee's first before you start going into like Del Frisco's and all these other places. Ain't no wrong with Cheesecake Factory for a little while.
Nothing wrong with that.
Nothing wrong. You get out of there.
People hate on Cheesecake Factory now. That's crazy.
I heard it's not the way.
The slander. But yeah,
that's what I heard. All right, man. It's your boy, Debtfreedeem.
And your boy, Jamie. No
yeah,
name.
Man.
That's all I got for you.
Subscribe, comment if you agree with term or UIL. Let's continue the conversation, man. We out.